Hello and welcome to another edition of CMS Forex News. This is Andrew Pang and today is Wednesday, October 15, 2008. Australia's leading index fell in August, posting a 0.1% decline. The annual rate of the index slowed to 2.5% from 3.3% in July. The economy, which has been in economic expansion for 17 years, is feeling the strain of consumers and businesses limiting their spending as the outlook deteriorates. The Aussie weakened overnight against its main rivals as oil prices continued to recede and risk appetite from yesterday turned to risk aversion in today's session. The pound-Aussie pair, which we don't highlight too often, has been pretty volatile recently. In today's trading, the pair climbed 900 pips and is now more than 1,300 pips higher than its low from yesterday. In the UK, the number of people seeking unemployment benefits rose by 31.8 thousand in September to 939,000, the highest since November of 2006. The figure was smaller than forecast, but still represents increased joblessness, and August's number was revised up. The ILO unemployment rate rose to 5.7% for the 3 months through August, the highest it's been since 2000. The pound-dollar pair stalled slightly in its overnight rally following the news, and then was turned back at the 1.76 level, which was yesterday's high. Price action formed a double top, and the pair then fell 250 pips in the dollar's favor to test the area near 1.7340. Stocks in London were down today for the first time this week as investors worried about economic growth. The key London index was down more than 7%, ending the risk appetite seen in the last two sessions in the pound-yen pair. The pair bounced between the 176 and 179 levels before falling lower to the 174 level in New York trading as U.S. stocks fell sharply into the red. In the U.S., retail sales fell 1.2% in September, the biggest drop in 3 years and the third decline in a row. The decline was broad-based. Excluding the 3.8% drop in auto sales, core sales were down 0.6%. Both the headline and core figures undershot expectations. On the year, sales were down 1%, the first time the annual pace has declined since 2002. Headline producer inflation saw another modest decline in September, with prices falling 0.4%. That follows a 0.9% drop in August. Energy prices were down, helping to lead the fall. Excluding food and energy, prices rose 0.4%, which was above expectations. The Empire State Manufacturing Survey indicates that conditions for New York manufacturers deteriorated significantly in October. The General Business Conditions Index dropped 17 points to a record low at negative 24.6. U.S. inventories grew at a slower than expected 0.3% in August, as sales plunged 1.8%. The yen gained on the dollar for the first time in 5 sessions as U.S. stocks fell amid worries of a recession. The Dow index was down 500 points at 2:30 p.m. Eastern. The pair formed a double top yesterday near 102.75 and fell to test the 100.40 area in today's trading. Despite the weaker U.S. sales and manufacturing data, the overnight euro-dollar rally fizzled around 1.37. With the intraday high missing yesterday's high, the pair is now retracing its steps from earlier in the week. By 3 p.m. Eastern, the pair had tested the 1.35 level. With the recent moves by central banks and governments most likely not able to forestall a more severe global slowdown, forecasts for demand for oil were lowered. That brought the price down below $75 a barrel at one point and pressured the loonie against the U.S. dollar and others. The U.S. dollar-Canadian dollar pair climbed 300 pips from its intraday low to trade near 1.1850 in early afternoon trading and looks set to retest its high from Friday. Overnight, Switzerland will post data on retail sales and investor expectations. Tomorrow, Canada posts its manufacturing shipments, and the U.S. releases its CPI and jobless claims. Also tomorrow, the U.S. posts data on foreign flows, industrial production, the housing market, and its Philly Fed Index. And that wraps it up for the day in Forex News. Join us again tomorrow right here at cmsfx.com.